This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 16th, 2015. Hope you had an outstanding Thanksgiving long weekend. Our time is 8:40 Mountain. Radio show runs on your favorite radio stations, including 630 CHED in Edmonton, Sunday afternoon at 3. Don't forget, the shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. Streaming 24/7, and you can listen anytime you like. We have a podcast. We're on your portable devices. Go to iTunes, type in The World Financial Report on Radio. You will find us there. Harold's websites, you can connect with him at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. That's 1-800-432-1022. Our featured diamond this week from rarecoloreddiamonds.com is a 1.2 carat radiant cut fancy vivid yellow internally flawless. You can see it right now. Video of the diamond, rarecoloreddiamonds.com, featured diamond of the week. And as we always say, the featured diamonds go very, very quickly. So if you're interested in investing in this diamond, call Harold on Monday morning, 1-800-432-1022, rarecoloreddiamonds.com. In the news this week, and don't forget, here in Canada, we have an election on Monday. Get out and vote. Whatever you do, get out and vote. Interesting quote from, this is now the Chief Financial Officer of J.P. Morgan, Mariana Lake. And this goes to show how tough things are in the financial markets. If markets remain at these levels, Q4 revenue will also be lower than guidance. The bank's markets revenue of $4.3 billion were down 6% year on year. Fixed income was down 11% year on year. So you can see a big company like JP Morgan starting to feel the effects of a slowing economy, a global economy as well in the United States. John Hathaway, Senior Portfolio Manager, Tocqueville Funds. The Dow Jones Industrial Average has now declined for 3 consecutive quarters, only the third string of such losses in 40 years. Health insurance premiums have increased by 39 to 56% since early 2013, meaning additional costs of $230 per month for the average family in the United States. Retail giant Walmart saw its stock fall 10% on Wednesday after saying earnings will decrease by 6% to 12% in the fiscal year ending January 2017. The lower guidance surprised analysts as they were expecting a gain of 4% on an average for the period, according to data compiled by Bloomberg. Also, lower gasoline prices don't appear to be spurring spending on other goods and services. Moreover, the release of the new iPhone model towards the end of the month did not do as much to boost electronic sales as people had anticipated. In fact, they actually contracted by 0.2% month over month. One of the great quotes this week, Harold, and I thought it was a very powerful quote from Anthony Watson, Uphold CEO. He says, "Nothing has changed since the 2008 crash, and it's disgusting." And he's an ex-Barclays exec. At this point, I say, you know what? I'm done with financial services. I don't like the business model. I don't like how they operate. I don't like the fact that those who can least afford it always pay the most. I don't like the risk that banks pose to global economics. Nothing has fundamentally changed. Jack Lew to Congress. The debt limit now exhausted as of Tuesday, November the 3rd. They will have to raise the debt ceiling in the United States. And Harold, one of the stories we'll talk about after your commentary, David Stockman said the stock market is a dangerous casino, and we'll review that story after your commentary. But one of the things that really was strong this week as well is people talking about a silver shortage And the silver shortage really is starting to drive up the price of silver, and gold benefiting as well.
You bet, because that's the only thing that would move gold up at this particular point, plus the clashes that are going on in Israel and that type of thing. But that doesn't affect the economy. So at this particular point, that's really not a big deal. The major factors that you have to look at as far as gold and silver taking off and moving higher is, number one, the strength of the dollar. That's the major thing. And the U.S. dollar is still very strong. It's trading right now at 95 cents. Did get dropped slightly this week, but, when the U.S. dollar goes down, gold will go up, and so will silver. So we're sitting right now at 1184. So we've had two closes in a row above that 1180 price that we talked about pretty well every week for the last 2 months, because gold has been trading just in a range between 1,080 and 1180. You've got that $100 spread. Now, we had two closes in a row above the 1180 level. We're trading right now at 1184. But these are not massive or major resistance levels. These are levels that, now that we've broken the 1180 level and we've closed twice above it, the next level for gold will be 12 to 1225. But the biggest number for gold, and the number that gold would have to get through in order for it to obviously make new highs, is the $1,900 price that we saw back in 2011. And again, we're $800 away from that happening, or $700 away from that happening. And I just don't see that happening at this point. Again, unless the U.S. dollar is going to fall substantially, which I don't see at this time, I just don't see gold. I don't see gold falling off or rallying. Rallying. And the same thing with silver. The other thing about the gold and silver market is inflation. There is no inflation according to the numbers. We all know differently, but the fact is that the numbers show that there's no inflation, not only in North America, in Canada, and in the United States, but also in Europe. So the fact is that England's got no inflation. They're saying that the U.S. has no inflation, and inflation is what makes the precious metals markets go higher. So at this particular point, you've got two major factors that will hold down the price of gold. One is if the U.S. dollar is going to go higher, which I believe it is. In fact, I'm banking on the fact that gold is going to fall to around the $1,000 level based on what the dollar is going to do. Again, I believe that the dollar is eventually going to break par, and then once it does break par, there's major buy orders above that in the futures market that will send the market substantially higher. So again, at this point here, the reason that gold did go higher this week, did break that 1180 level, and silver did get over $16, is trading right now at 1620, is probably because there are shortages in the coin market in silver. Now, we've seen that before. We've seen many times that the Canadian and the American mints have come out and said that there's not enough physical silver in order for them to mint these beautiful silver and gold coins. So the fact is, every time that statement came out, we'd sit here scratching our heads saying, well, if there's a physical shortage of silver, why in the world is silver sitting at such a low price? So that's the thing that's always in the back of my mind at this particular point, is that we've seen shortages in this market before. And the fact is that we've seen the same situation that we've talked about, that they've talked about this week, which is shortages in the physical silver market. But then again, you've got the banks like J.P. Morgan and other banks like them that are shorting the silver market, which is why the silver market will not rally until these short positions are off the market. So at this time, even though some bullish news may come out of the market, as long as the U.S. dollar is strong, which it is, and as long as there's no inflation, which there isn't, according to the numbers, then gold and silver cannot get much higher than they are at this particular point. And if the U.S. dollar does rally, as I expect that it is going to, and that could happen before the end of the year, we see that situation happen, and you're going to see the price of gold drop down to around $1,000. And again, I don't want you in any way, shape, or form to believe or to think that we do not believe that gold is going to go higher. We definitely do. We're in a short-term situation here, an intermediate situation actually, that is going to keep the price of gold lower until we get these shorts out of the market. So I believe there's going to be one more sell-off, and it could be that gold could go to 12 or 12 and a quarter. But again, we've seen this happen many, many times. The market has rallied. It's actually got a lot of people to buy back into the market, and now is not the time to do that because nothing has been confirmed. The only thing that we saw as a confirmation this week was that gold had 2 closes in a row above 1180. And again, it hasn't taken off much from there because we're sitting right now at 1184. So again, please don't get too excited about this move in gold and silver at this particular point, because unless the U.S. dollar is going to fall, which I just don't see at this time, because if you look at all of the world financial situations, you look at China, China's in trouble. They devalued their currency twice last month. We know that Greece, Italy, Spain, Portugal, Germany, France, most of Europe is in trouble. We know the euro is trading right now at 112 to 113. The Canadian dollar is trading, actually did a little bit better because oil actually held in there this week, and oil is what really directs the Canadian dollar. So all in all, at this particular point, we're almost in limbo. And I do believe that the price of oil is unfortunately going to go lower. And the reason I say unfortunately, because of all of our friends and clients up in Alberta that are suffering because of the weak price of oil and what's happening up in Fort McMurray. So again, unfortunately, the reason that oil is going to drop is because Russia is going to ship cheap oil, and so is Iran. And there's already saturation in the market already. There's so much oil already on the market that, again, bringing on 2 major producers can only bring down the price of oil. So the fact is that if oil is going to drop, so is the Canadian dollar. And that's why I feel, and I know this is not a popular call, and I know a lot of people would disagree with me, but I believe the Canadian dollar is going to 60 cents. And I think the U.S. dollar is going to break par and go to 108 to 109, which will mean that the Canadian dollar will be 50% less than the U.S. dollar, and it wasn't that long ago that they were even. That's how severe the currency markets are. Don't forget, at one time the euro was trading at 150. It's now down to 112, and it was even lower than that. So, again, the currency markets are getting hammered at this point, and even though the U.S. economy is not in fantastic shape, it's in better shape than all the other countries that I just mentioned. So the fact is that the U.S. dollar will remain strong, and when some bullish news comes out, you're going to see that the U.S. dollar is going to take off. So if you have your money sitting in all Canadian dollar denominated investments, you're going to get into trouble with that. And there's ways that you can get out of that. We have investments that are based in U.S. dollars, and you may be sitting back and saying, yeah, but Harold, we would have to convert Canadian to American. It's going to cost us a 30% difference in the conversion rate. That is very true. But the fact is that if I'm right, and the American dollar goes to 107 to 109, and the Canadian goes to 60, you're going to make about 30% more or 20% more on the currency. And that's a big return on top of the fact that our other programs are very, very successful. So if you're not doing well at this particular point, if you're very confused as to where to put your money, because let's face it, it's extremely difficult to make money today. The stock market is not a place to make money. And what Randy said, we're going to talk about a report where they're saying that the stock markets are like casinos. There's no doubt about that. They've been that way for a long, long time. Why in the world anybody would be trading with safe money in the stock market at this point makes absolutely no sense. If you've got your money sitting in retirement savings plans, I can pretty well assure you over the last decade, over the last 10 years, you have not made any money. So the fact is we keep on feeding and feeding and feeding an asset that does absolutely no good for you. And the fact is that the RRSP is only a beneficial investment if your investment goes up in value, because all you're doing is delaying paying your taxes. So the fact is that what an RRSP is supposed to do is give you an opportunity to fund that retirement savings plan and keep it in existence. And again, if it's making money, that's great. But if you're losing money, you're eventually going to it's done absolutely no good for you. You're wasting your time sitting in retirement savings plans at this particular point if they're all stock denominated. So at this particular point, even though we did get a strong rally in gold this week and we did see silver move up somewhat, I'm certainly not convinced at this point here that now is the time to jump into the gold and silver market until we start to see a breakdown in the U.S. dollar And until we start to see inflation start to move higher, we're not going to see a change in the metals prices of any relevance whatsoever. So, again, the two major factors for gold and silver to go higher are inflation, which we're not looking at anything substantial at this particular point, and the strength of the U.S. dollar, and I believe the U.S. dollar is going to go higher. So at this point, Randy, I'm sticking with my predictions that we are going to see lower metals prices between now and the end of the year, and then at that particular point, again, we are looking for some fresh news that is going to move this market higher. So again, over the longer term, the reason that we still want to hold gold and silver, and I'm still holding a major part of my gold and silver. Again, I am not trading this market, selling it, or anything at this point. It's a hedge against what's happening in the marketplace at this point, and what's going to happen, a year or 2 years or 5 years from now. And if we don't have that type of protection, we are going to be in big trouble. So that's why we own gold and silver. But we don't want to trade it. I know it's only human nature that if the market is going to come down or if the market's going to take off, you want to be able to buy it as close to the bottom as possible. I just don't believe we're there at this particular point. So all in all, Randy, I still see that if the U.S. dollar is going to gain strength, which I think it has to, and if we're not going to see any move towards inflation, and if there was inflation, they would have raised the interest rates in September, but they didn't do that. So without any type of inflation, it makes no sense for them to raise interest rates. Back in the 80s, when gold hit its all-time high at that point of $850, and then we started getting into the early 80s, you saw interest rates go up to double digits, and a lot of us remember that. So the fact is that when interest rates went up to double digits, that's where you started to see major changes in the market, and that's when mortgage rates went to 22%. So again, at this particular point, I just don't see any major change in the metals at this time. I do see the potential for the metals to come down, and I will certainly let you know when we see gold and silver as a buying opportunity. We want nothing more than to see our Canadian clients do well in these markets. And the fact is we've done well for many, many years. The last 3 years, the markets have been suspect. They've been trading in a range, and there's been no fresh news that has moved the gold and silver market. And the news that we need to see is changes in currencies, and we need to see inflation. Now, again, if we do have a shortage in gold and silver, then they need to broadcast that. It needs to make a significant difference in the marketplace, and again, that isn't happening at this particular point. So I'm sticking with my predictions of owning your assets. Make sure that you own your physical gold and silver, own your diamonds, own your art, own your classic cars, own everything. Don't own paper-denominated assets. And don't take this the wrong way, but especially if the Canadian dollar is going to drop another 20%. If that's going to happen, you're going to get killed in that market. If you don't know how to deal with the currency markets, please give me a call. I'll spend as much time with you as you need over the phone in order to explain to you how in the world you can react to what's going to happen in the changes in currencies.
RareColoredDiamonds.com is Harold's website. Harold just made a very generous invitation for you to call him. His telephone number, 1-800-432-1022, 1-800-432-1022. And Harold will obviously take the time to sit down and speak with you. And remember, this conversation is confidential. Harold's website, RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 1.2 carat radiant cut, fancy, vivid, yellow, internally flawless. See it at RareColoredDiamonds.com, featured diamond of the week. It's a diamond that you definitely want to check out. Well, as promised, there was a story that came out, and it's from Business Insider. David Stockman said, the stock market is a dangerous casino that's disconnected from the real economy. The stock market can only be described as a dangerous casino which is untethered to the real Main Street economy. And he goes back a few Fridays ago about the jobs report. Friday's jobs report was about as clear an economic warning signal as you could want. So in effect, the casino was buying hand over fist right into the teeth of the next recession, on the conviction that the ship of fools running the Fed will delay liftoff yet again, meaning raising interest rates. Indeed, the money market is already pricing out any chance of a rate increase in October and December, and it doesn't reflect even a 50% chance of liftoff until next March. You could call it never and be done with it, but even that bears its own ringing absurdity. Were the Fed to defer until March, as the market is now predicting, it would mean that the money market rate would have been pinned to zero through month 81 of this so-called recovery. That is to say, why is the world doing these blockhead things and thinking that they've outlawed the business cycle when so far this century they have already produced two devastating financial meltdowns and business recessions in their aftermath? Read the full story. Get our free weekly newsletter from Herald at rarecoloreddiamonds.com. 1-800-432-1022 will email the info out to you, our free weekly newsletter. You can go through it in 5 minutes or spend hours if you want to. But David Stockman coming out and saying that basically the stock market is a dangerous casino. And one of the things that, and we've talked about it before on our show, that's a real tragedy. We see it in Canada here. Now it's happening in the United States. They manipulate the inflation rates due to calculations. There will be no raise for $65 million on Social Security in the United States. For the first time in 5 years, there will be no annual raise in their Social Security benefits in 2016. The reason? A decline in inflation caused by falling gas prices. Well, let's face it, we all know that prices are continually going up, especially for the important things in life, like food. Everything seems to be going up. And here they have, in the United States, the poor seniors down there not getting a raise on their Social Security. One of the stories that caught my attention, and we mentioned it a little earlier, Jack Lew to Congress, the debt limit now exhausted as of Tuesday, November the 3rd. John Boehner stepping down as the Speaker of the House in the United States Congress. A lot of people believe that he will help raise that debt ceiling, but there could be quite a fight due to the fact that you have Republican candidates and Democratic candidates running for the presidential nomination and ultimately fighting for the presidency about a year from now, that a lot of politics will come into play. So we'll have to watch that. But there was an interesting number that came out. 107% increase in federal debt held by public, and it's more than doubled under U.S. President Obama, up $57,431.65 cents per household. You can see the federal debt held by the public up 107%. The budget gap in the United States for the year 2015 was a shortfall of $438.9 billion. They're still running massive deficits. In fact, in Illinois, they're going to delay pension payments because of a cash shortfall. So no pension payments due to a cash shortfall. We're in crazy financial times. If you don't know what to do, speak with Harold Siegel at rarecoloreddiamonds.com. Call 1-800-432-1022. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. We're taping our show on October 16th, 2015. Joining us via the telephone, our financial and diamond expert, Harold Siegel. Don't forget, the election is Monday. Get out and vote. Whatever you do, definitely cast a vote come Monday. Connect with Harold. He made a very generous offer in the first half of the show. If you'd like to speak with him personally, privately, about your financial situation, and it's very crazy financially, geopolitically in the world today. Harold has some programs and suggestions that he can sit down and talk to you about. 1-800-432-1022, 1-800-432-1022, or connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The featured diamond of the week is a 1.2 carat radiant cut, fancy vivid yellow, internally flawless. It is an absolutely gorgeous, gorgeous diamond. You can see it online, rarecoloreddiamonds.com, featured diamond of the week. And we have video of the diamond there. You can see it, and you'll know what we're talking about. It's a big, chunky, beautiful diamond, one that would be excellent for investment. And on top of it, obviously, you could put it in a jewelry piece and wear it at your leisure. But Harold, now here in the spring, or rather we had a lot of activity in the spring with auctions. Now we make it to the fall, and some of the auctions are starting to crank up. In fact, next week there's an auction on the 20th, and we'll have to wait and see how the results are, but we'll definitely have them for the next show. And it's auction season. And I know that you have an auction site as well, hsfineauctions.com.
You bet we do, and we plan on having some amazing auctions for diamonds and other amazing collectibles coming up over the next few months and going into next year. So we're really going to have a lot more auctions. It's a very exciting part of the business. The featured diamond this week is a 1.2 carat, radiant cut, fancy vivid yellow, internally flawless diamond that is such an important diamond, and the color on it is a 10 out of 10. And the diamond is inscribed. Very, very few diamonds, aside from Argyle, are inscribed, but this one is. And the reason that it was inscribed, because it's such an important diamond. First of all, look at the 4 C's, and then you're going to understand exactly why this diamond is the way that it is and so important. First of all, the carat weight. It's over a carat. It's a 1.2 carat. The cut, it's a radiant cut. It's the most popular of all cuts. The square cut and the cushion cuts make up 85% of all colored diamond cuts. Then you've got the color, which is fancy, vivid yellow. Now, vivid means it's got the highest saturation of color. And then on top of that, on a scale from 1 to 10, this diamond is a 10. Otherwise, it would not have been inscribed because, again, it's such an important diamond that they took the time to inscribe it for identification purposes. And then the last reason that you want to own this diamond, as far as the 4 C's go, is the clarity. It's internally flawless. So it's over a carat. It's a radiant cut, which is extremely popular. It's fancy vivid yellow, which is the best you can get. And then it's internally flawless, which is the best you can get. Then on top of that, the color is so saturated that we had it laser inscribed, and it's absolutely amazing. And the exciting thing about this is it's a diamond that does nothing but go up in value. It's a very amazing investment stone. And because of the currency situations in Canada, where the Canadian dollar is 30% less than the U.S. dollar, and diamonds are priced in U.S. dollars, we're going to sell this diamond in Canadian dollars. So some lucky buyer will buy this diamond next week, and the fact is they will be 30% in profit as soon as they buy it, just on the currency alone. This is a diamond that you put it away for 10, 15, 20 years, you will not believe how much that diamond goes up in price. Normally they go up by about 15, 20% a year. But the fact is that this is such an exceptional diamond where the color is just so strong and so beautiful. It's internally flawless. Again, we had it inscribed because it's such an important diamond. But put this diamond aside and put it away in a safety deposit box for 10 years, and you'll find that you'll do tremendously well, probably better on this type of diamond or an Argyle pink type of diamond than you will on any stocks or bonds or commodities or anything. There's nothing at this point that compares to the safety and the profit potential of diamonds. And again, this is one of the best that you could possibly buy. So it's a 1.2 carat, radiant cut, fancy vivid yellow, internally flawless diamond that we had laser inscribed because it's such an important and beautiful diamond. So because we were able to hedge the Canadian American dollar, that's the only reason that we can sell this diamond in Canadian dollars. And the reason that we're doing that is that we want our clients to do well. So we do not mind taking less on the diamond because we hedged the Canadian American dollar. Actually, over the last year, we made a lot of money with this hedge, and we still have it on because I think the biggest moves are actually coming very soon with the U.S. dollar going higher and the Canadian dollar going lower. So if I'm right on the spread between the Canadian and American dollar, you realize you could be up 50% just on the currency alone on this diamond or any diamond that is priced in U.S. dollars that has been bought, a few years ago in Canadian. So we're ecstatic about that. On top of that, if you look in the newsletter, there's a big, vivid yellow flawless diamond that's going to be coming up for sale that's going to sell for close to $30 million. So you're talking about the best of the very best. And any time you buy the best, you always get the most back for it. So we're extremely excited about what's happening in the marketplace. It's so difficult to make money today without taking a massive risk. And that's the beautiful thing about the rare color diamond market, is that there is no risk, aside from maybe losing the diamond or something like that, because these diamonds never, ever decline in value. There's so few of them available that they go up tremendously in value. However, I do have to caution you that they're not a short-term investment. If you buy a diamond and only hold it for 2, 3, 4, 5, 6, you're not going to make any real money on it. These are the type of assets you want to put away for a long, long time. Back in 2003, which is about 13 years ago, I bought a 2-carat vivid purplish pink argyle diamond for $350,000, and I've held on to that diamond all this time, and I'm going to hold on to it for at least another 10 years. And right at this point, this diamond's worth over $3 million. It's gone up 1,000% from what I paid on it. And the fact is that when you put these diamonds aside for a long time, they go up tremendously in value. I've got 4 young grandchildren now, and all of them have diamonds put away in their safety deposit box. Not that they know it, but they have diamonds put away in their safety deposit boxes. I could have bought them stocks or mutual funds or anything to put away for them. But the reason I chose diamonds is because they never go down in value, these type of diamonds, and because over the longer term, they'll increase in value more than any other asset that you know. So that's why we're into the diamond market. Also, one of the major reasons that we recommended diamonds over 10 years ago was because of the currency markets. We felt that there was going to be currency devaluation. Little did we know that the currency that would devalue pretty well the most was the Canadian dollar. Most of my clients are from Canada. I'm from Canada. Randy's Canadian. So the fact is that the Canadian dollar a few years ago was even or slightly higher than the U.S. dollar. And now things have changed, and now you can see why it's so important to hold the diamond that can be sold in another currency. The good people of Greece, if they own diamonds, and they hit their financial crisis a couple months ago where the banks closed for an entire month. Nobody could get money out of the bank or ATMs or anything like that. But a diamond, you could have walked across the border to Germany or Switzerland. You could have sold your diamond, whether you made a profit on it or not, is irregardless. The fact is you would have had money again. You would have had money to get back into business, to pay some bills, to feed the family, to make some other money. But the fact is that if you don't own an asset like a diamond, you're leaving yourself short because, again, really, over the years we've talked about, certain situations that some people construed as doom and gloom. But a lot of those things happened. And the fact is that I consider oil dropping from $150 down to $30 and $40 a disaster. It's a disaster for Canada. It's a disaster for Venezuela and Russia and Iran and Iraq and every other major oil-producing nation. The fact is that when oil dropped as heavily as it did, it killed the Canadian dollar. And all you would have to do, as all of us as Canadians, is that all you have to do is go to the United States and realize that if you wanted to buy $1,000 US, it's going to cost you $1,300 Canadian. That's your 30% right there. So all in all, we're saying that there's tremendous opportunities in alternative assets that are not stock and bond and currency-related items. You need to have some investments that are sellable in U.S. dollars at this point here, and that's diamonds. And again, most of my clients right now that own diamonds are up 30% or more just on the currency alone, let alone what the diamond has gone up. So look at this week's featured diamond. It's a spectacular diamond that's one of the best diamonds available that you could buy as an investment quality diamond, and you're going to be up 30% as soon as you buy the diamond, because we're going to allow you to buy this diamond in Canadian dollars as opposed to U.S. So, Randy, I'm ecstatic about what's happening in diamonds. The auctions that are coming up, they're showing huge, huge prices, and again, they should, because these are some of the rarest diamonds in the world.
Nature's art, it's like a Picasso, and in a lot of cases, even rarer. RareColoredDiamonds.com featured Diamond of the Week, a 1.2 carat radiant cut, fancy, vivid, yellow, internally flawless. See it at RareColoredDiamonds.com, featured Diamond of the Week. And Harold touched on it, I did as well. There is a 75 carat fancy, vivid, yellow diamond, and it's going to be highlighting a sale next week. Christie's is pleased to announce the highlights of its important jewels auction on Wednesday, October the 20th. I guess that's a Tuesday, October the 20th in New York. And the auction is going to be featuring what is just an absolutely beautiful, beautiful 75.56 carat, brilliant cut, fancy, vivid yellow diamond ring. And the estimate on it, $3 to $4 million. So we will let you know next week how that progresses as well. There's a 16-carat fancy vivid pink diamond that could reach $28 million, November the 10th in Geneva. And then we add to that another diamond, a blue moon diamond, and that is a 12-carat diamond. They're saying it could go for up to $55 million. And that is at an auction in Geneva as well the next day, Remembrance Day here in Canada, November the 11th. And if you're interested in auction results, we have them from past auctions. Harold will be happy to send them out to you. You can connect with Harold at RareColoredDiamonds.com, 1-800-432-1022, 1-800-432-1022. Go to RareColoredDiamonds.com and take a look at our featured Diamond of the Week. One of the things that really struck me, though, Harold, this week, and to me, it really points us in the direction of hard assets. When you have somebody like Anthony Watson coming out, the Uphold CEO, saying nothing has changed since the 2008 crash, and it's disgusting. He's an ex-Barclays exec, and he is actually saying nothing has fundamentally changed. So here we are 7 years away from the financial crisis, and nothing has changed. More than likely, we could have another financial crisis based on, at this point, we don't know what. It could be an interest-related calamity. Maybe they raise rates when they shouldn't, and it sets off a derivatives trigger that causes a financial meltdown. Or maybe they lower rates because the economy is bad and we get into negative rates, and who knows how that would end up. But we don't know what the trigger will be. Could be a war. We're not too sure. But the main thing is, if you have a top executive coming out saying nothing has changed and it's disgusting, that is a warning to you and I that we in our portfolios need to have an insurance policy. And Harold and I have been advocating an insurance policy of gold, silver, and diamonds, particularly diamonds and gold and silver. So heed the warning from a top executive that nothing has changed. It's disgusting. Protect yourself. I think that's the real warning coming out of a quote like that in a show like we have today, Harold. Now's the time to protect yourself, because an insider is saying nothing has changed. So we could quite easily head back to another crash scenario, and then we'll be sitting there kicking ourselves that we did not have hard assets and an insurance policy in our portfolio.
Well, you're 100% right. And again, it's extremely important to have an insurance policy because, again, you never, ever know what's going to happen. But look what's happening with the Dow again. It's back over 17,000, no matter how bad things are. You know, they always say as Walmart goes, as goes the United States. Well, Walmart stock dropped 10% in one day last week. We're still sitting at over 17,000 in the Dow. You know, as much as I hate to say so, because I don't trade the Dow in any way anymore, because, you know, agree with the statement. It's just too speculative and too much of a gamble. And again, I don't gamble. I'm not a risk taker in that sense. But the fact is that this stock market will probably go to 20,000. I believe the Dow is going to go to 20, and I believe that the U.S. dollar is going to go to 107 to 109. So, again, I know it's against what other people are saying, but until something changes the direction of the U.S. dollar, I just don't see that I'm going to be wrong on this situation. So, but the bottom line is that anything can happen at any time. The derivatives market can collapse, and that would cause the stock market to plummet. Other situations, could make the market do the same. So that's why we're saying it's a smart idea to be in alternative assets that are not affected by the stock market. And you do not want to have everything that's sitting just in paper, whether it's paper Canadian dollars, whether it's paper stocks or paper bonds or anything like that, because there's a huge difference between physical silver and paper silver. Physical silver is going higher because there's a shortage of silver, but paper silver is going lower. So go figure that one out. Most people can't. So we just sit back and we say, we know the markets are manipulated, and we know that there's very little that we can do about it at this particular point. However, every market has its day, and there will be a time within the foreseeable near future that the metals are going to get back on track. Because the fact is that the metals never should have dropped in the first place. When gold hit $1,920 back in 2011, there was nothing fundamental in the market to make gold drop. It was forced to drop by the exchanges that raised the margin requirements on gold and silver 5 times in 1 week. You just don't do that kind of stuff. It's impossible. But they did it anyways, and that's when gold dropped from 1,900 down to 1,100, and that's where we're sitting at this point. It had absolutely nothing to do with the economy or anything like that. All it was that gold being at 1,900 to 2,000 reflected poorly on the U.S. economy, and that's why they dropped the price of gold down. So that's what I hate about the markets, the fact that Wall Street can manipulate their markets no matter what is being done, no matter what the financial situations are, and no matter what the fundamentals and technicals are. So again, we shy away from that market because it makes no sense to trade in a market that you cannot analyze. And that's always been one of my strengths. I can sit down and I can read a chart and I can determine where a market's going to in a fairly traded market. But you try to do that now in the metals or in the stock market, it's impossible because both markets are manipulated. So we're just going to sit back and let the markets catch up. And when it does, you're going to see one of the biggest bull markets in gold and silver hit again, and it's going to hit when most people never even think that this is happening. So, again, I've traded this market for half of my life. I think that I know these markets probably better than most, and at this point here, every indication to me is to be in physicals. Own the physical gold and silver. There will be an opportunity to buy it cheaper, and then we're going to buy it again, and we're going to buy this market, and it's going to take off. But the major reason to own gold and silver and diamonds right now is protection of your principal. It's one thing to keep your money. It's another thing to make money. Right now, keeping your money is the most important thing because almost everything else, aside from diamonds really, is speculative, and you do not want to be in the speculative markets at this time.
As we mentioned, David Stockman. He was in the Reagan administration in the budget area. The stock market is a dangerous casino that's disconnected from the real economy. That from David Stockman, another insider with a warning. Now's the time for hard assets. And we're talking about rare colored diamonds, nature's art, private, portable, stable wealth. Speak with Harold Siegel today about starting your own diamond investment portfolio. Connect with him at rarecoloreddiamonds.com or call 1-800-432-1022. That's 1-800-432-1022, our featured diamond of the week. And remember, as Harold was saying, an incredible bonus. You'll be paying in Canadian dollars. The diamond is a 1.2 carat radiant cut, fancy, vivid, yellow, internally flawless. From rarecoloreddiamonds.com, featured diamond of the week, go to the website, take a look around. You can click on featured diamond. You can see video of the diamond there. And next week on the 20th, a 75-carat fancy vivid yellow diamond on auction at Christie's in New York, and we will have highlights for you. But we see some of the art auctions that are taking place, record prices. Car auctions, record prices. Their handbags are going for record prices. Hard assets going for record prices. And that's why we're seeing record prices as well for diamonds, nature's art. And they're the rarest of the rare. We've talked about Rick Rule before, who is the head of Sprott USA, saying, buy things governments can't print, meaning currencies. Governments can print currencies. No one can print diamonds. No one can print, obviously, gold and silver. You want assets, as Harold was saying, that can maintain their value in either deflation or inflation. And now is the time to don't sit back and do nothing. Take action. Connect with Harold, 1-800-432-1022. Or head to rarecolorediamonds.com, because we've had 2 warnings on today's show from David Stockman coming out saying that basically the stock market is a casino. And then we had the quote from another CEO coming out and saying nothing has changed since the financial crisis. So, Harold, we have about 4 minutes left in our show here. The warnings are there. Nothing has changed. The only thing has changed that we're smarter via shows like ours and obviously past knowledge, knowing what's happened in the past. We're smarter. So now we need to do the right thing and put ourselves in a position where we don't go down the same road we did in the past.
Exactly. You have to learn from history, otherwise history repeats itself. So, again, at this particular point, we're not trading the markets. You want to own the markets. You want to own them physically. Don't finance your metals. Don't leverage your metals. Own them outright, because, again, there's a lot of danger in the world. There's no doubt. And the reason that we've still holding our metals and the reason that we recommend them is because we truly believe that within the foreseeable near future, we're going to see these markets start to trade the way they should be trading. The only difference is going to be, and I'm pretty confident with this, is that we've had an amazing bull market from basically 1999, 2000, when we first started buying it, all the way up to 2011. We had some pullbacks and profit taking and things like that, but the fact is we had a market that we could sit down, read the charts, and determine where the next move was going. It's hard to do right now because, again, the markets are manipulated, not only in gold and silver, but also in the stock market and in currencies and in other markets too. So, again, we don't want to speculate. We don't want to try to second guess what the next move is going to be, because eventually these markets are going to come back our way. Right at this particular point, the biggest moves in gold and silver are going to be determined by one of 3 things: either inflation, either the value of the U.S. dollar, whether it goes higher or lower, and then obviously supply and demand. Those are the 3 major factors that will actually affect the price of gold and silver, and I'm leaning short term towards the U.S. dollar going higher and for there not to be any inflation over the short term, at least inflation numbers that they're going to show us. So I'm sticking with what I'm saying. I think gold is unfortunately, going to take a little further drop, but if you're not leveraged or financed, it should not be a problem for you, because again, when gold does take off again, it's not going to be your normal bull market. It's going to skyrocket like it did in 1980, where most of the move came in a very, very short period of time.
Connect with Harold. Speak with him. He made a very generous offer earlier in the show. He's happy to speak with any of our radio listeners. He'll sit down and talk to you over the phone. And remember, the conversation is 100% private. If you're wondering what to do with the money that you have invested today, Harold obviously is an expert when it comes to investing, and now's the time to take him up on his generous offer. Speak personally and privately with Harold at 1-800-432-1022, 1-800-432-1022. Connect with Harold at rarecoloreddiamonds.com. Get our free weekly newsletter. It's the companion to our radio show. You'll see all the material that Harold and I are reading on a weekly basis. You can go through it in 5 minutes or literally spend hours if you want. It's really up to you, but get up to date, and Harold will be happy to put you on the mailing list for our free weekly newsletter. Our featured diamond of the week is a 1.2 carat radiant cut, fancy vivid yellow, internally flawless. See it at rarecoloreddiamonds.com. Featured diamond of the week. We have our video of the diamond there. Harold, with about 20 seconds left, it's a confusing time for a lot of us.
It is, but get the newsletter and you'll see the light. You'll be able to get the information you need to make an intelligent decision. I want to wish everybody a wonderful weekend, a very profitable day, and go Toronto Blue Jays. We're going into the next phase of the playoffs.
Yes, so exciting. Go Blue Jays, go. Hope everyone had a happy Thanksgiving, and don't forget to vote on Monday in the election. That's it. Another edition of the World Financial Report on radio. And obviously connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Another edition. We will talk to you next week.